Fala galera do além, muito boa noite a todos, sejam todos bem-vindos aí ao nosso canal. Vamos lá galera, senhoras e senhores, sejam todos bem-vindos aí, vamos começar socando El Porrete. El Porrete. E aí galera, 100%. Estamos aí. Vamos entrar na operação comprada aí no Dow. É por incrível que pareça, é comprado também no dólar, cara. Comprado nos dois. E aí vamos colocar os stops, né? No ouro, no Dow, o stop é aqui. E o gain lá em cima. E o ouro, o stop é aqui. E o gain aqui em cima. $14,71. Beleza? Boa noite, Paulo. Vamos lá, comprado no ouro e comprado no Dow. Dow. Vamos lá, galera. Comprado aí no ouro e comprado também no Dow. Tô achando que esses dois vão subir aí até o mercado asiático abrir, tá? O mercado asiático abrindo, cara, eu creio que o Dow vai dar uma despencada aí. Daqui 2 horas.
Is it possible to ring-fence the issue of Chinese sovereignty in Hong Kong and then pragmatically move forward with a, what the Chinese would call a win-win situation on trade?
Well, that's what both sides have tried very hard to do. Trade is the one area where really they are engaging. If we are in the foothills of this new Cold War, as Henry Kissinger said yesterday, the one area where they are engaging is this trade negotiation, and they need to keep that going. It's worth pointing out that the Hong Kong bill is symbolic in a lot of ways from the U.S. side. What it does is sets up a process by which the U.S. administration would review annually the status. It does not strip Hong Kong of the status immediately. And what we saw over the summer in August with the administration's designation of China as a currency manipulator was that there was a lot of heat going into that happening, and then when it actually happened, things calmed down fairly quickly.
Right, do they really want to use that power that they have? It's a whole different story, right? But when you take a look at the last few months of the negotiations, who is winning? Because I keep feeling that President Trump seems to backing down on a lot of the demands that he's made. For example, the blacklisting of Huawei, it seems to be turning out like another ZTE case. And when it comes to China's demands, I don't see them really backing down.
Well, let's be clear. Huawei is a long way from being another ZTE case right now. It is still on the blacklist. These special licenses that are being issued are just very narrow exceptions for non-sensitive technologies. It will remain on that blacklist for some time. And just in a sign of how sensitive that is, we're already seeing senators...
Boa noite, Luciano Garcia.
President Trump saying, hey, we don't want you to issue these special licenses. So it's a tough political issue for President Trump. I think what we're seeing now in the trade wars is both sides really want to hit the pause button. They want to avoid a further escalation, and in particular these December 15th tariffs that would hit smartphones and so on. And try and go into next year, which is an election year, obviously, in the United States, with things on a slightly calmer footing.
I was going to say, it's that striking that balance between a deal that works but not being seen to capitulate on either side. Right? Sean, great to have you here in Beijing. Our trade reporter, Sean Donnan, here at the New Economy Forum. Let's get you to First Word News with Jessica Summers in New York. Jess.
Thanks, Heidi. Well, the UK election campaign has seen Labour publishing the most radical manifesto from a major party in decades. It promises to raise tax revenues by about 10% a year, fund free university tuition and care for the elderly. Leader Jeremy Corbyn attacked his critics as, quote, billionaires and vested interests who are the enemies of ordinary people. The general election is on December 12th.
If the bankers, billionaires and the establishment thought we represented politics as usual,
Marcelão, entre em contato aí com o Huber.
that nothing was really going to
Ele
change,
tá investindo aí na sala do além,
so
a B3.
why bother?
Eu mandei lá no seu zap lá.
But they know we mean what we say. They know we will deliver our plans, which is why they want to stop us being elected.
Israeli Prime Minister Benjamin Netanyahu is to face trial for corruption. He's been charged with bribery, fraud, and breach of trust in a move that could halt his career. Netanyahu is the first sitting Israeli leader to be indicted.
Tô comprado no ouro e comprado no Dow. Os dois vão subir até às 22 horas.
And sacrifice the integrity of his office. Netanyahu says the investigation is, quote, tainted and didn't pursue the truth.
O stop tá aqui, ó, aqui embaixo.
Political jobs in Sri Lanka are now held by two brothers with close
Aqui, ó, SL é o stop e TP é o gain. Aí olha aqui em cima, aqui, ó. Tá? O ouro tá aqui em primeiro e o Dow tá embaixo em segundo. Tá bom? Esses são os valores aí. TP é gain e loss é SL. Só anotar aí.
And Sydney and much of New South Wales continue to choke on pollution from bushfires burning across eastern and southern Australia. Conditions are so bad that it's almost impossible to see the city's iconic bridge and concert hall. The Royal Fire Service says the smoke is mainly coming from fires in the north of New South Wales, and pollution levels are 10 times higher than normal. Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is
Jess, thank you. Well, Stella Head will be speaking to the Vivo Vice Chairman John Sadinsky here at the Bloomberg New Economy Forum in Beijing. But up next, we'll discuss the outlook for China with CSIS Senior Advisor Scott Kennedy. Live from Beijing, this is Bloomberg.
Pursue common, comprehensive, cooperative, and sustainable security, and reject zero-sum game and Cold War mentality.
There's a period which there's a peace because nobody wants to fight the country that has won the war, and there's a new world order.
In the present-day world, only cooperation is the answer.
Actually, I worry that some of those changes will be irreversible.
The world's changed forever. I think the continent of supply from a single source for anybody in the world has reduced.
move customers, move production. We haven't seen that. We continue to serve our customers in China with their plans here.
I think there's a good chance that we'll see some progress on the trade discussions. I've been fortunate to speak with policymakers on both sides, and I'm encouraged.
Some major names here at the New Economy Forum with opinions on the trade talks. Let's bring in Scott Kennedy, Center for Strategic and International Studies, Senior Advisor. Scott, always great talking to you. Just before you came on, we had news from Microsoft that they actually got those temporary licenses to sell to Huawei. Tell us about this dependence of China on U.S. technology, because it seems that the blacklisting, that the entity list is actually pushing back on that.
Yes.
Is this the right strategy for Washington?
The entities list and the sort of piece by piecemeal approach of letting out technology, I think it's a mistake. We have a very interdependent relationship across the board, where they're talking trade, investment, finance, and tech. And that interdependence is good for American business. It's actually also good for American national security. And so the steps that we've taken recently by putting Huawei on the entities list, I think has made the Chinese feel that they can't depend on American suppliers, and so they've doubled down and tripled down on indigenous innovation. Of course, there's some things that they must depend on. There's certain types of chips, certain types of software services, and that's why certainly, you know, the things that Microsoft supplies is critical to them, and it would endanger American national security. So I think that's sort of a rational reason why they were given the license.
You wrote an op-ed with one of our other favourite China people, Jude Blanchett, about this destructive decoupling between the US and China, right? Is it possible to undo that? Because, you know, even though we keep saying you can't undo globalization, we are seeing this bifurcation, be it whether it comes to industrial policy or technology. How destructive is it to go their separate ways, and is it unavoidable?
Oh my God, it is so radical an idea to decouple. I mean, the crazy idea of hardline used to be deterrence and anti-dumping and countervailing duties, and then it became, the hardline was like, let's put on some sanctions, right? And now we're talking, let's rip these two economies apart. That's based on a very simple mathematical formula. Greater engagement equals less security. In fact, that's actually not true. You can have greater engagement and protect your national security if you have the right type of mechanisms in place to manage the risk. Some things you can't sell and provide China, and that's why we've proposed this idea of managed interdependence, that it's not just a free-for-all, that you have to be careful, but ripping the two economies apart, putting a big line down the middle of the Pacific, that's nuts.
Not only nuts, but can it even be done? It's not like the governments control this process.
Yeah. No, I think you're exactly right. That well, first of all, I think it's important to say that the discussion over the last 6 months about decoupling, we've seen very little decoupling. If you look at the level of trade, finance, etc., even in tech, there's been some, but it's still mostly modifications of supply chains. But yeah, if you try to fully disengage and pull apart, you don't know exactly what business is going to do, whether the U.S. is going to be isolated or China.
You're based in D.C., right?
Yes.
Are you surprised at the level of threat that people in Washington feel about the growth of China? Why did we have this change in mindset?
Yeah, I think it's a few things. One is the U.S. generally is worried about globalization and the effect on our economy, and President Trump's political base is rooted in that anxiety. And then you've just got very successful China, and an idea, and there have been a whole series of reports about how China is successful across the board in so many different technologies, and is looking at the U.S. in their rearview mirror. And then you've got issues of values, the NBA Hong Kong, etc., that's come up. So it looks like an existential threat to the U.S., and therefore people are on freak-out mode. And so we've left before we've looked in some policies, and so we're struggling. Eventually we'll figure out what we're going to do long-term. And so I think that's where we are right now.
Is the rise of AI, of greater investment in connectivity in China, a real threat to Western countries like the US? And I suppose in part two of that question is, does that change if we have a change in government? Because it feels like a bipartisan, I don't want to say paranoia, but insecurity, maybe.
Sure.
Freak out, like Scott just
Yeah.
put it.
Yeah. Well, certainly there's some ways in which China could use AI or quantum or blockchain or some of these other technologies that could be dangerous for the United States and the Western Alliance and others. You think about the way the social credit system could be applied, or how technology might be used in Xinjiang or abroad, and those are really concerning. Is it an immediate existential threat? I don't think so. But it is a challenge, and we have to figure out how to manage it. And there's some types of technologies that have been part of export controls that we need to continue. We might need to expand those, some types of investment restrictions. But we don't need to go from full openness to full closure and autarky. That's really going way too far. And so this is what United States is trying to figure out what that correct balance should be.
What happens once President Trump signs the Hong Kong Human Rights and Democracy Act?
I think actually not a whole lot. Certainly the Chinese are very upset about this, but when you've got all but one member of Congress voting for this, the president's not in a position to veto it. He might, after 10 days, just let it go into force. I think the Chinese will be upset, but I think everyone needs to remember that the Hong Kong issue is a domestic Chinese problem. It's about one country, two systems. It's not about the United States or UK. And the resolution of Hong Kong isn't going to be debated between Washington and Beijing or London. It's going to be debated in Hong Kong. And so I think we all hope that it's resolved in a way that allows Hong Kong to continue to thrive.
Scott, always a pleasure having you at us for this second year running out at the New Economy Forum. CSIO Senior Advisor Scott Kennedy joining us here at the New Economy Forum. It is being organised, of course, by Bloomberg Media Group. It's a division of Bloomberg LP, the parent company of Bloomberg News. Lots more to come here from Beijing. This is Bloomberg.
Actually, poor. No foreplay? Eat your bag of lays with a smile on your face. If all the diseases have been taken, I'll take a tax.
Forum in Beijing.
And I'm Heidi Stroud. This is Daybreak Asia. Well, Charles Schwab eliminated fees for stock trading. It's now seizing on the ensuing turmoil in the retail brokerage business to buy a major rival. Sources telling us that Schwab is poised to announce a deal for TD Ameritrade.
Sue Keenan has this story. Sue, so what's the latest?
Well, we had heard that they could announce, Schwab could announce as early as the end of this week, even after the bell, that they had plans to buy TD Ameritrade for $26 billion. That word rocked the stocks, as you can see. TD Ameritrade and Schwab both rallying, like E-Trade, which will be left to battle a much bigger rival. fell almost double digits. Take a look at the 5-day charts and you can see the announcement was a surprise, although consolidation in the industry was not. Schwab really changed the retail brokerage game by cutting commissions to zero and forced others to follow suit and match. That hurt their revenues and their year-to-date stock performance. Now, just a week later, as we mentioned, seizing on the turmoil and reportedly ready to buy one of its smaller rivals, but one of its bigger rivals, TD Ameritrade. This would make it a potential $5 trillion titan, and that would certainly get a lot of attention from Washington.
Yeah, particularly when it comes to antitrust scrutiny.
There are a lot of concerns that there will definitely be a hurdle that Schwab would have to jump over in purchasing TD Ameritrade, but we spoke to Schwab just a couple weeks ago, and he hinted that he was ready to do a deal. Let's listen.
Well, I don't know whether we'll be successful in that pursuit, but I think in the industry you're going to see more consolidation, more firms getting together. You just have to have that scale and volume. And so we're prepared to do it if the opportunity arises, but if not, we're perfectly happy to go it alone.
Now notice he said scale and volume. That's what a lot of analysts say is the way that the online brokerage firms have to go now that commissions have been cut to zero. In terms of the combination, it will certainly face a lot of scrutiny because Ameritrade also, again, would be in a situation where they would look not only at the lower fees, but the fact that there are a lot of investment advisors that would also benefit here. Again, it's a very exciting deal a lot of investors are looking at.
Keen in there in New York. Let's get you a quick check of latest business flash headlines this hour. Chinese contract drug maker Pharma in Beijing is said to have raised almost $600 million after pricing its Hong Kong listing at the top end of a marketed range. The pricing implies a market cap of almost $4 billion. The Hong Kong listing comes less than a year after Pharma completed a share sale in Shenzhen. That stock there has risen more than 600% since listing in January. Reports from Sydney say the Westpac board will meet later to discuss claims that the bank frequently breached financing laws. Westpac is accused of 23 million breaches involving regulations on money laundering and terrorism and failing to spot transactions linked to potential child abuse. And coming up, we'll be discussing reworking the rework package. We'll talk about the company next. This is Bloomberg. on central bank pairings.
The Fed is an independent group. It's an impressive group. I worked a lot in 2008 when I was managing and overseeing the AIG restructuring. I did a lot of work with the Fed and the New York Fed then, and I saw how well coordinated the Fed was between the PBOC, the Bank of England, the Bank of Japan, and the European Central Bank. Jerome Powell has played this game with a very straight bat, and I think what's interesting is the policy is in a good place, but I think what's even more important is he and the president both prioritize two things. They both prioritize the economy, and they both prioritize the labor market. And I think there is an enormous amount of respect at the need to keep the institution independent, and it remains independent.
Thank you so much for your time this morning at the New Economic Forum. John Krasinski, PIMCO Vice Chairman, joining us here in Beijing. Of course, the New Economic Forum is being organized by Bloomberg Media Group, a division of Bloomberg LP, the parent company of Bloomberg News. Well, coming up next, staying on Hong Kong, the city goes to the polls on Sunday in district council elections that could be yet another flashpoint for the city. We'll be taking a look ahead to that. This is Bloomberg.
Our top stories this morning in D.C. and
Dow in the S&P.
Down. We saw the euro on a 7-day.
Responsible moves in the currency market, which is down half.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the first court Asia week.
US and Japan duke it out over exchange. China's monthly onshore bond market information.
Some time in Hong Kong, and it's a very complex, multi-layered situation.
Broader business environment is still okay, and the impact on our business has been okay.
We saw clients and people, thinking about contingency planning.
So far, we have not seen an impact. I think people are taking a kind of wait and see attitude. And I think the central expectation that this somehow will get resolved.
Obviously, with the downward pressure on economic activity, I think we can expect to see some more impact from here. But so far, manageable.
To be honest, so far we haven't seen any outflows or major movements.
I don't see any change in the behavior of clients that are significant financial players in Hong Kong.
Some of our guests here at the New Economic Forum staying optimistic on Hong Kong's future as a financial hub.
Yeah, that really interesting thing that John Krasinski from PIMCO just said about, the capital markets is still super functional, even if the city is getting more dysfunctional by the day, and that turmoil is expected to continue. Hong Kong heading for its district elections on Sunday. While the local vote won't fundamentally change the political system, there will be almost a key referendum on these protests after the unrest saw its most violent week in months. Here's why they will matter more than ever.
At stake are 18 district councils across Hong Kong with 452 constituency members. the candidates are mainly split between those from pro-establishment parties, which basically means pro-China, and those from pro-democracy ones. There's also a lot of independents, as some candidates prefer to avoid the party tag, and many new faces have entered the race from outside traditional party boundaries. At the moment, the electoral map of Hong Kong looks heavily pro-establishment, but emboldened by months of anti-government protests, the pro-democracy parties have been campaigning harder than ever, fielding a record number of candidates and working together to combine resources. It's not just local and symbolic influence that's at stake, as whichever side wins the most district councillors can also ensure they get around 10% of the seats on an exclusive committee who select the Hong Kong chief executive. Candidates running for chief executive must get backing from at least half that committee before being appointed. So while it's not an automatic game changer, that small slice would still be a big deal for pro-democracy parties, who have long complained the committee is stacked with pro-China loyalists. Voter turnout and interest for these elections isn't great, but it is growing, with an increasing number of people registered to vote and a big student population that has probably never been more politicized. This time, the district council elections will matter more than ever.
Markets open in Tokyo and Seoul at the top of the hour. Let's turn to Sophie for what to watch in markets. So,
Well, Sharon, futures in Tokyo and Seoul just hinting at slight gains, and if that modest rise holds, the regional benchmark could avoid a second straight week of declines in Asia. Now, E-minis a little changed after a 3-day drop, but to the downside. Usually market moves then, given the mixed picture on the trade front and uncertainty here in Hong Kong ahead of those Sunday district council elections. Now, checking quickly on the yen, we're seeing little reaction to Japan's inflation data for October, and offshore yuan steady in the 703 zone after reaching 705 on Thursday amid conflicting trade reports. And as you can see, muted moves in the Forex space making for a snooze fest, with global Forex volatility staying near all-time lows as traders attempt to assess where the next bout of turbulence may come from. Much more coming up ahead as we count down to the open in Tokyo and Seoul. This is Bloomberg.
Very good morning, I'm Heidi Stradmont. We are live at the New Economy Forum in Beijing. Global leaders here in business and finance are tackling the challenges facing the international economy in the year ahead.
I'm Sharon. Asia's major market opens have just opened for trade. Welcome to Daybreak Asia.
top stories this Friday. Stocks slide on conflicting trade signals. China remains optimistic, but there's concern over US support for protests in Hong Kong. And the city votes this weekend in district elections that will be a key referendum on months of unrest. We'll assess the importance of the poll.
And Asia's rapid population growth and how to feed millions of hungry mouths. We'll look at the challenges facing agriculture. But for now, let's get straight to the market action with Sophie in Hong Kong. So, of course, the South Korean and the Japanese markets back online.
Yeah, taking a look at the mood in Tokyo, you have the Nikkei and the Topix just a little changed here after a 3-day decline. We're seeing little reaction in the yen to CPI, which picked up just a touch after last month's sales tax hike. Now, lower energy prices adding to that drag on price growth, but remains to be seen if BOJ Governor Kuroda will take the latest data as a signal that risks are indeed mounting to price momentum. Now, let's switch out the board to check in on the Kospi, which is also holding steady after a 4-day decline, while the ASX 200 also resuming gains up 0.5% here, while we're seeing Kiwi shares under pressure and S&P E-minis moving to the downside now, 0.1%, extending declines after we saw the benchmark slide for a third straight day on Thursday. Well, let's switch out the board to check in on treasuries this morning, looking fairly steady with a quiet start to the session after drifting lower Thursday, ending a bull flattening streak with a 10-year yield just around 1.77 right there, and the offshore yuan just holding around 703 as trade in Hong Kong risk remains. Now, Haigeng Sherry, PIMCO's vice chairman, earlier telling you about the distinction he's seeing between what's happening in capital markets versus the situation for the consumer space, and on that, cosmetics player Sasa reportedly to close 30 stores in the city over the coming year, and will only consider renewing its lease if the rent is cut by at least 50%. Heidi.
So if we're in there in Hong Kong, let's get to New York now. Jessica Summers has the first row of news. Jess.
Thanks, Heidi. Well, President Trump has signed a 4-week spending bill that puts off a possible government shutdown until December 20th. The Senate cleared the measure earlier in a 74-20 vote after it had passed the House. The stopgap became necessary because Congress again failed to complete action on the 12 annual spending bills needed to keep agencies operating by the October 1st start of the fiscal year. The UK election campaign has seen Labour publishing the most radical manifesto from a major party in decades, promising to raise tax revenues by about 10% a year, fund free university tuition, and care for the elderly. Leader Jeremy Corbyn attacked his critics as, quote, billionaires and vested interests who are the enemies of ordinary people. The general election is on December 12th.
If the bankers, billionaires and the establishment thought we represented politics as usual, then we could be bought off that nothing was really going to change. They wouldn't attack us so ferociously. Why bother? But they know we mean what we say. They know we will deliver our plans, which is why they want to stop us being elected.
And Israeli Prime Minister Benjamin Netanyahu is to face trial for corruption. He's been charged with bribery, fraud, and breach of trust in a move that could halt his career. Netanyahu is the first sitting Israeli leader to be indicted. The Justice Ministry painted a picture of a politician who abused his position and sacrificed the integrity of his office. Netanyahu says the investigation is, quote, tainted and didn't pursue the truth. Global news 24 hours a day, on air and in TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers, this is Bloomberg.
Let's take a look at what our MLive team are watching today. Strategist Mark Cranfield joins us from Singapore. And Mark, of course, we had the Tokyo, Japan CPI numbers, and even with the sales tax hike last month, that really didn't boost inflation that much.
Yeah, indeed. It's been stubbornly low for a very long time. You keep on hearing Bank of Japan Governor Kuroda saying that it's been very difficult to get it to move up towards his 2% target, and the numbers today just reinforce that. But the bigger story in Japan is where they go now on fiscal stimulus and whether the Bank of Japan can steepen the yield curve. So they're two kind of parallel issues, and we've already seen that Prime Minister Abe has given word that he wants to see a supplementary budget. that will come in to help to stimulate the economy, and that could well come into place in the first half of next year. So that will certainly give a boost to Japanese markets, and it may even start to see a little bit of increase in inflation once that starts to come in. There's also talk about Japan possibly issuing 50-year Japanese bonds. They haven't gone that far so far, but other countries in the world have done. We've seen Switzerland issue that far, and even the UK has some very long-dated bonds out across the curve there. So people will be looking at Japan to see whether or not they're willing to go as far as 50 years. And if they do, what kind of effect would it have on the yield curve? Would it really steepen the yield curve and give insurance companies even more room to invest for the future? So these are the big questions for Japan, and CPI really is in the background in relation to those.
Mark, looking at the performance of Hong Kong today, we were just speaking to John Straczynski from PIMCO, and he made a really interesting point that so far the detriment to Hong Kong from these protests and the unrest has been on the consumer, the retail, partly the macro level, but the city's capital markets very much intact. You look at the Alibaba secondary listing, you look at a number of listings recently. Do we expect that really to kind of continue to stay a bit more, I guess, Teflon-esque, even if we do see more violence on the streets?
Well, certainly investors so far have been quite good at compartmentalising the two, putting business on one side, putting the protest on the other side. I mean, although day-to-day life is being disrupted, companies are still working, profits are still being made, and life to some extent continues to go on, as we've seen in other parts of the world. It doesn't necessarily mean that the whole economy comes to a complete standstill. But certainly the longer it persists, you can see already that the GDP data for Hong Kong is worryingly weak. I mean, we're already having negative GDP data, and it could stay close to zero or almost zero, very little growth for a very long time. Hong Kong certainly needs to get out of that. So yes, it may not be affecting it immediately, but people will get, the longer it goes on, they will get more concerned, and they may start looking at other parts of Asia for their business.
Mark, great to have you. Mark Cranfield there, I'm live strategist joining us out of Singapore. Well, China's chief trade negotiator Liu He has said he's cautiously optimistic that an initial deal with the US will be signed.
But of course, Beijing's response to the US Hong Kong bill and other long-running concerns may prove an issue. Joining us now at the Bloomberg New Economy Forum is former US Trade Representative Michael Froman. He's also vice chairman of MasterCard. Always great to see you, Ambassador. So we are so focused on this phase one trade deal, right? Will it happen? Will it not happen? When will it happen? I want to ask, what happens next? Will this actually lead to a broader deal?
I think that's really the question, because the phase one deal is really largely a purchase deal. How much of our exports will China buy? The real issue is that the conversations we're having here at the forum have really been about the future of the U.S.-China relationship more broadly, and how do the two countries accommodate each other when they're following very different sets of rules. Those are the harder issues to deal with. They take deep diplomacy and a long-term commitment to following through on that, and we have to see how we get through the phase one deal before we get there.
But that's not even the harder issues, right? I mean, they seem to be having problems with the low-hanging fruit, the agricultural purchases. You, of course, are a negotiator. Is this normal? Is this just the way that things go before you get there?
Well, trade negotiations are always messy, and nothing's agreed to until everything's agreed to. So it shouldn't be surprising there's some bumps in the road. But you're right, this is the easy part. China needs soybeans, they need liquefied natural gas, they need oil. They're either going to buy it from us, or they're going to buy some of this from Brazil or elsewhere. And so this should be the easy piece. The harder piece is getting to forced technology transfer, intellectual property rights protection, the role of state-owned enterprises and subsidies. We did a lot of work on that in the context of the bilateral investment treaty in the last administration, the Obama administration, and I'm hopeful that this administration will pick up on that and move forward with those commitments.
Our previous guest, Scott Kennedy from CSIS, has been talking about this idea of a self-destructive decoupling between the US and China. Is it possible to have a decoupled or a bifurcated relationship when it comes to things like industrial policy and tech, and yet have a healthy, mutually beneficial, resumption of trade flows?
I think the challenge is that if we really go different directions on industrial policy, one country's industrial policy affects the other. So if China continues down the path that it's on, it's not going to be a surprise to see opposition in the United States, in Europe, and elsewhere, given the distortive effects on international trade. The question is, how do we move towards some common set of rules, whether they're in the WTO right now or not? And some of that was around, is in the Trans-Pacific Partnership that continues to exist among the other 11 countries. And it's really a question whether we can get to that kind of dialogue with China about what the new rules of the road for trade are going forward.
Yeah, Microsoft has been given the license to export to Huawei.
Will Washington be okay with that? I mean, there seems to be a broad consensus in DC at the moment that there's a really hard line against Beijing.
Well, on Huawei in particular, I don't have any great knowledge to understand what the particular security threat is or isn't there. I think that the key thing is that people are looking to Washington for consistency in approach and want a clear sense of what they can and can't do, and then they will adjust to that.
I think we spoke at length when we attended the many rounds of TPP negotiations, and then as we know, the United States is no longer a part of that. RCEP negotiations were a little bit more, I guess, dynamic and faster. India, no longer.
If you can call 7 years faster, right? Relatively fast, considering trade negotiations.
Are we moving back towards multilateral agreements being kind of your bread and butter in the world of trade? Or, do you look at things like RCEP and think, well, with India pulling out, then really the more powerful agreements are going to be the bilateral ones?
Well, I think there's been a lot of progress, even as the U.S. has pulled out of TPP. The other 11 moved forward. The EU has had a very robust trade agenda with this region as well as in Latin America. In the Pacific Alliance in the Western Hemisphere has continued to deepen their partnership. Africa has a multilateral agreement being implemented. So I think having multi-parties around the table is still a viable way of going. Even if India doesn't sign RCEP, you still have more than a dozen countries who are part of RCEP and can move forward.
Talking about multilateral organizations, of course, the WTO right now under a lot of pressure, especially coming from the Trump administration. When China joined, they promised that they would open the payments market by, 2006 or so. MasterCard has been one of those that really haven't been able to break into China because they really haven't kept to their commitments. What do you want to see from China as we continue to see these trade negotiations as a business?
Well, separate from the trade negotiations, we're continuing to have good dialogue with the Chinese regulator and Chinese officials. And as they move towards opening their market further in financial services, we're hopeful that we're going to be able to contribute in a meaningful way.
But it's in terms of the market, in terms of commercially, it's largely irrelevant, isn't it? Because by the time you get to 2020, the financial services opening up, I mean, there is no kind of market segment that external players can come in and really meaningfully get, because it is Alipay, it is WeChat, it's such a saturated market there, right?
I think there's a lot. This is a very dynamic sector, both a person-to-person, person-to-merchant, business-to-business, and there's always going to be new developments, and we're keen to play a role in how these develop.
How dynamic is Asia? Because, of course, there's so many emerging economies, and yet at the same time, these growing economies, changing demographics, changing socioeconomic status of people. How do you bridge the gap? And what is MasterCard doing in order to not leave people behind?
Well, inclusive growth is absolutely central to our agenda. We're very much focused on bringing 500 million more individuals into the financial system, and as we achieve that goal, we're already focused on the next set of goals. We have programs in every country to focus on bringing women, small businesses into the systems to get more access to credit, into financial services. We view it as a key part. Payments can oftentimes be a gateway into financial services for people to achieve greater financial security, or for small and micro businesses to get access to credit and grow and create jobs. So it's a key part of what we do. It's core to our business strategy. It's not just about philanthropy or corporate social responsibility. We feel it's a key part of what we do, and we do well by doing good.
Ambassador, last day, second and last day of the New Economy Forum, what's been the most, I guess, interesting, surprising, useful, but also dominant part of the conversations that you've been having?
There's been a lot of interesting dialogue about this long-term trajectory of the U.S.-China relationship. No one has a clear sense of where it's going or what the right approach or what the right answers are, but it's now squarely on the table as perhaps the most important question facing not just these two countries, but the global economy. How will these two countries deal with each other? Under what set of rules and institutions? And can we avoid having
self-destructive trade wars over the long run to get ourselves back on a better track.
Yeah, it's really the greatest strategic, competitive question of our time, isn't it? Ambassador, always a pleasure having you.
Thanks for having me.
The MasterCard Vice Chairman and also the former US Trade Representative, Michael Foreman, joining us here. And of course, the New Economy Forum is organised by Bloomberg Media Group, the division of Bloomberg LP, the parent of Bloomberg News.
And coming up, we continue to digest the conflicting signals from Beijing and Washington. 24th Century China Chair Susan Shirk joins us on set. This is Bloomberg.
Peut-être que je vais mettre un promotionnel. Peut-être que je vais mettre un promotionnel. Bonjour. Peut-être que je vais mettre.
Short-waisted. Am I way down here? I feel like I'm
from the New Economy Forum in Beijing.
And I'm Heidi Stroud-Moss. This is Daybreak Asia.
Our next guest says U.S.-China relations are the worst they've been in 40 years. Joining us now is Susan Shirk. She's the chair of the 24th Century China Center at UCSC and the former Deputy Assistant Secretary of State in the Clinton administration. Thank you very much for joining us this very cold morning here in Beijing.
Sure, it's nice to be here.
Let me get started on your view of what the Chinese leadership is thinking. Of course, you're the author of China Fragile Superpower, which was published a decade ago, and then there you spoke about the insecurities of the Chinese leadership, which is perhaps the biggest threat here. What are the insecurities of this administration and President Xi Jinping?
Well, President Xi, of course, has consolidated power in a way very different from his predecessors, Hu Jintao and Jiang Zemin. So instead of ruling through a collective leadership, he really has concentrated power in a more Mao-like, personalistic leadership. And one of the first things he has to worry about is keeping the other leaders satisfied, because right now he's using the anti-corruption campaign and more a kind of climate of fear than a real power-sharing system. So the history of communist regimes is always that there's always a risk of splits in the leadership. The second thing he has to worry about is keeping the public satisfied. Right now we have high pork prices. Inflation is always the greatest risk. In 1989, Tiananmen very important part of that context was inflation. So he really has to keep inflation under control as well as maintaining confidence through, through economic growth.
Yeah, and of course the trade war, the sort of reputational, or I suppose the face aspect of it was pressure on him as well, right? To be able to get a favourable result without being seen to capitulate, as the case for President Trump, to his base.
Yeah, I think President Trump is more directly impacted because of the upcoming election. President Xi doesn't have an election to worry about, right? But he does have to not look like this is another form of unequal treaties. So he needs to depict it as something of a win for China as well as the United States.
Something that caught my attention in your remarks. Does China really have to care that much about the public?
Yes, I mean, they do. Maybe they don't really need to, but the leaders always do. And what they don't have to run for election, but they do want to, they're always worried about some mass upheaval. And they have the memory of Tiananmen in their minds, and they have the memory of the fall of the Soviet Union. Now, of course, the Soviet Union did not fall, Communist Party didn't fall as a result of some bottom-up revolution. It was a split in the leadership.
The memory of Tiananmen, the possibility of what's happening in Hong Kong could happen in Taiwan. How does that make Beijing react? And how long do they allow this to continue?
Well, that's a question I've been asking Chinese colleagues here when I talk to them. I've been asking, is Hong Kong help Xi Jinping politically or hurt him politically, domestically?
Because the nationalism is strong.
Yeah, the impression I have now is that even liberals are nationalists now, and there's very little sympathy for the demonstrators in Hong Kong, especially as violence has grown. And so, in a way, it's helped unify support around Xi Jinping. It's not a problem for him that way.
In that sense, how difficult does this very strong nationalism of Chinese people, how difficult does it make it for an actual trade deal to happen?
I really don't think it's that hard, because in any negotiation, you have to be able to say that this is a good thing for both sides, and I'm sure that's what will happen. And, I guess the question is the U.S. side rational, realistic about this?
What about how Washington feels about this? Very shortly, are they sort of overreacting in a sense to the perceived China threat?
I believe that China's overreaching and America's overreacting.
That puts it into context.
I think it creates a really dangerous dynamic.
The big question of whether it's inevitable that we continue to see the butting of heads, given that this is really the great strategic competitive relationship of our time.
People say that. They say it's inevitable, Thucydides' trap, etc. We heard Henry Kissinger say yesterday we're in the foothills of a new Cold War. In other words, this is still only at the very beginning. And I hope that the United States will really think through a sensible strategy for competing, but competing in a way that doesn't lead to us blowing one another up. And right now, there's not a lot of that kind of clear thinking in the United States, but I'm hopeful that in a post-Trump administration, there'll be the opportunity to do that.
Susan, very quickly, you're off to meet President Xi after this. What do you want to bring up with him?
I've been thinking about that. I don't know if I'll have the opportunity to ask a question, but
what would you ask him?
I would ask him some questions more about the domestic political situation. Because I'd like to ask him what's going to happen in 2022. Because the peaceful turnover of power in China, which was achieved by his predecessors every 10 years, was really a stabilizing Communist Party rule in China. So what's going to happen in 2022? Will he remain while all of the other cohort in the standing committee have to step down? It doesn't seem to me that that's going to be something that is necessarily acceptable to the other leaders.
Susan, thank you so much for joining us.
Okay.
Talk at length for a long time.
Okay.
University of California, San Diego professor, former Deputy Assistant Secretary of State, Susan Shirk with us. This is Bloomberg. Welcome back to the New Economy Forum here in Beijing. You're watching Daybreak Asia. We have breaking news at the moment. We are getting the Jibun Bank Japan PMI for the manufacturing for the month of November coming
coming in at 48.6, which is a slight improvement from the previous month. But of course, this again, manufacturing PMI, 7 months of contraction below that 50 threshold. Of course, exports still under pressure. They fell over 9% in the month of October year-on-year. So not surprising, the manufacturing PMI is again in contraction territory. When it comes to the services numbers, wow, take a look at that. It's bounced back. It's now in expansion territory. 50.4. This after we had the services number in contraction for a while. It fell actually in October for the first time since the data has been released in 2016. So it's now back in expansion territory. The composite number, 49.9.
Yeah, pretty muted day to day, I think, fair to say here on Asia. It's hard to see how that's really going to drive the flow of trading either way. The investors are just waiting for more details about, yes, trade. Let's get over to Hong Kong. So if you have Reuters on the markets for us, so what do you see?
Well, Heidi, muted certainly is the term. The yen not budging after the Jinbun numbers coming out there. Yen headed then for a second weekly gain, holding at mid-108 levels. Little reaction as well to the CPI data we got earlier this morning. And elsewhere, we're seeing modest rises for Asian stocks, but not enough to keep the regional benchmark from clocking a second weekly decline. And bonds are under pressure to the downside there. As Aaron Brown at PIMCO said on Weaver TV, the market looking for some bullish signals that things aren't going to get worse. And Aussie bonds shrugging off the softer PMI reading. CBA's November PMI fell into contractionary territory despite policy easing and tax cuts. But with the rebound in home prices and employment growth, Goldman expects the RBA will not pull the trigger on speculated QE, and Goldman penciling in one more rate cut in the next 6 months from Australia. And treasuries are flat today after drifting lower Thursday, as bets for a steeper curve have been dampened by the recent flattening trend. As JP Morgan Assets Ian Steely notes, it feels like we're treading water now with the current limbo on trade, leaving the 10-year stuck in the middle of a range. The benchmark yield is down about 90 basis points since the end of 2018. A quick check now on some stock movers in Asia. I want to highlight Kosei, which is under pressure. The stock was cut to underweight at Mitsubishi UFJ this after it announced second quarter net profit that missed analyst estimates. And Panasonic losing ground as it takes the axe to its low profit businesses and announced plans to cut costs. And Westpac extending declines, erasing its 2019 gains. And the board is reportedly to meet this Friday to discuss allegations of money laundering and terrorism financing that have been made against Westpac. Heidi.
Time for Cameron and there in Hong Kong. Let's get you the first word news now from Jessica Summers. Jess.
Thanks, Heidi. The former governor of the People's Bank of China says policymakers still have room to act, providing monetary and fiscal work in union. Zhou Xiaochuan was speaking at the New Economy Forum in Beijing amid continuing debate about how the government will handle China's widening slowdown. Zhou's comments underline the central bank's concern about letting borrowing costs fall too much.
We can still try to avoid getting very soon into the negative interest rate area. If we could successfully manage that's the macroeconomic control in this regard, then we don't need to consider that much of unconventional monetary policy.
The two top political jobs in Sri Lanka are now being held by two brothers with close ties to China. New President Gotabaya Rajapaksa has appointed his sibling, the former President Mahinda Rajapaksa, as Prime Minister. Their Sinhalese Buddhist party has been calling for a snap election, with the current vote not scheduled until at least next March. President Rajapaksa has already announced tax cuts and help for farmers. And Sydney and much of New South Wales continue to choke on pollution from bushfires burning across eastern and southern Australia. Conditions are so bad that it's almost impossible to see the city's iconic bridge and concert hall. The Rural Fire Service says the smoke is mainly coming from fires in the north of New South Wales, with pollution levels 10 times higher than normal. And Indian Prime Minister Narendra Modi is putting the flagging economy front and center with the country's biggest privatization drive in more than a decade. He's also renewing attempts to ring-fence the crisis of the shadow banking sector. India is mired by a deepening slowdown and waning consumption, and Modi wants to transform the economy into a $5 trillion operation by 2025. Former President Obama is warning that advances in technology are creating a splintered world, stoking disparities between rich and poor nations and the people within them. Speaking at a Salesforce.com conference in San Francisco, he said new technology is allowing companies and citizens to do more, but is also fueling more extreme inequality and contributing to the growth of public anger and anxiety. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
Following another day of hearings on Capitol Hill, House Minority Leader Kevin McCarthy called the attempts to impeach President Trump a political hit job. Let's bring in Bloomberg senior editor Derek Wall back there. So, second week of public hearings, very dramatic testimony in Congress. What have we learned?
Well, the hearings have now wrapped up in the House Impeachment Committee. We're looking forward to what's going to happen next. And what's going to happen next is that lawmakers are going to have to make a decision, Democratic lawmakers, on sort of how they proceed here. They've gotten a lot of second-hand witnesses, but they haven't been able to get some of the first-hand people that they've wanted. The White House has said that they're not going to provide them, and the State Department has said they're not going to provide them. So Democrats really do have a choice here. Do they sort of move forward without them, or do they wait on the courts to rule on what they can do? And it looks like right now the Democrats are going to move ahead regardless. That puts a possible vote on moving forward on the impeachment in some time before Christmas, in that sort of window, and so it looks like this is going to proceed ahead. Now, testimony did wrapped in somewhat dramatic fashion, but it's really clear, I think, from watching this and watching the reaction, that Republicans and Democrats are living in two different realities when it comes to the impeachment process. I mean, you looked at the front page of the Washington Post that said that diplomat acknowledges quid pro quo, and Kevin McCarthy, who you just referenced, said there was no quid pro quo. I mean, they both can't be right, but they both are sort of living, as I say, kind of in parallel right now. So it's very clear that even though some of this testimony may have been quite dramatic, may have laid out things, as Democrats say, in a very plain and clear fashion, it's also not making much of a difference or an impact among the views of Republicans. And as this goes forward, remember, impeachment is both a legal and a political process. The next stage, once the House clears this, is to go into the Republican-held Senate for adjudication.
Derek, in the meantime, has public opinion shifted at all?
Not really. Public opinion has been remarkably resilient on this. Now, Democrats have gotten a little bit more clarity on the public opinion front. This has not been, I think there was some concern among Democrats that this was going to be a little bit of a risk to them. There really has not been any great amount of risk. It's sort of, the impeachment polling has kind of tracked President Trump's approval ratings here, and the country is fairly divided on impeachment, with narrow edges towards saying that the process is going forward in a sort of fair way. So you have seen this kind of track along the entrenched political rails. Right now, the United States is a very deeply divided country on impeachment, on President Trump, on a whole lot of political issues. And this is kind of falling within those tracks rather than carving new ones.
Derek, always great to have you. Bloomberg senior editor Derek Wallbank there. Well, over in Hong Kong, the city is set to hold district council elections on Sunday. This is the first opportunity since protests began in June for the public to make their voices heard in the democratic process. If, of course, Jerry, the vote goes ahead.
Fala, galera! Já abri aí o mercado asiático.
Yeah, absolutely. There's been 5 months of protests in the city, and that has really focused attention on these elections. The protest began with opposition to an extradition bill that was proposed here, but have gradually morphed into a call for greater democratic democratic accountability in the city and demands for universal suffrage. So given this is the first vote, and given that district council elections, being very low-level elections, are actually a more direct form of democracy in the city than the city's more powerful legislative council elections, which set aside some seats for businessmen and other things like that. It's become a bit of a focal point for protesters and the pro-democracy politicians here in the city.
And what are we expecting?
I think we're expecting pro-democracy lawmakers to make some gains based on the momentum of the protest movement. It's not always clear exactly who is allied with who. There's about 452 elected positions. Some people haven't declared exactly who they're with. Pro-democracy lawmakers are sort of circulating a list saying who's allied with them. So we're expecting those people to make gains, and that might mean that they will wield more influence in appointing lawmakers appointing people who make up this committee that chooses the chief executive of Hong Kong. So it could potentially have some impact down the line.
Have we seen any more reaction in Hong Kong, whether it's from protesters or the government itself, on the fact that President Trump could at any moment sign that Hong Kong Human Rights and Democracy Act?
Yeah, the city has pushed back quite remarkably against it, putting out some fairly strong statements this week as it moved through the Senate. I'm not exactly sure when we'll see a firmer reaction, but Carrie Lam, the chief executive, has more than once spoken out, saying it's kind of totally inappropriate, it's meddling in the city's affairs. And so if it actually gets signed into law by President Trump, we're likely to see a pretty fiery reaction. That's probably more likely going to come from Beijing, but we'll also see the city's politicians make a stand against that for sure.
Ian, thank you so much for that. Ian Muller there in Hong Kong. Right, and coming up, we'll discuss the global impact of African swine fever and how such a crisis could be prevented in the future. That's in an exclusive interview with Grow Intelligence CEO Sarah Menker. This is Bloomberg. From the New Economy Forum in Ixelles, Beijing. And Sherry Young, this is the
here in China, Beijing, really seeing the impact of this disease.
Yeah, joining us to discuss implications of that is someone very keyed into global farming and agricultural trends. Sarah Banker is a founder and CEO of Grow Intelligence, and you obviously use analytics and data to identify some of these trends, as well as, I think, increasingly identify the inefficiencies in the agricultural sector as well. Disease obviously being one of them, but I'm wondering, how does that play into a bigger picture of how the level of preparedness that governments have for facing agricultural and food shortfalls or disruptions like swine fever?
Yeah, I mean, you know, swine fever is probably the most unprecedented type of outbreak that the global ag industry has seen in the last 50 plus years. And one of the things that makes it quite unique is that China, because, you know, it broke out in China, China is the world's largest consumer of pork, the world's largest importer of soybeans. When you think of global food demand, China is the kind of anchor for that. And so the ramifications that it has for global food markets, you know, these could last for another 3 to 5 years. And one of the things that has made, you know, I think it very clear to the world is actually preparedness, meaning when you see an outbreak, how fast can you react? But also, how fast can you predict what the outcomes are going to be so you know what the alternatives are, right? So do you know how fast it can spread? Do you know what the herd size will become, i.e. how many pigs will die? And then what does that actually mean for global demand?
I was going to say, how did it get this bad?
Well, one of the things that's very complicated about swine fever is that unlike a lot of other disease which tends to be airborne, this is just through contamination, right? So it spreads in very methodical ways. But also because a lot of farming, hog farming in China is backyard farming, very, very small farms, it gets very hard to control disease when you're dealing with homes that have maybe 5 pigs, 10 pigs at a time. And that spread gets much harder to control than you have, you know, a facility with 100,000 that you essentially control right away, and then you can control the spread. So it's contamination, and unlike a lot of other disease which is airborne, where you can actually figure out through wind patterns, etc., this is much harder to actually figure out, you know, where it goes next, because it's just contamination based.
Even without shocks like disease, do you think governments, do you think the Chinese government, for example, are well prepared for the escalation of demand? Because I know you've been critical of, for example, US government forecasts of demand and supply across agri and food.
I think the world as a whole, so it's not just government, I would say even businesses are not prepared to the level and the extent they should be. And the reason is the shocks to our system are increasingly greater. So this is shocks due to things like disease outbreak, or shocks due to things like climate. And these are now happening in a world that is also increasingly more interconnected. And so I would say that it's not just government, it's actually businesses themselves are oftentimes very reactive as opposed to predictive and preventative, right? So I think, to me, similar to the conversations we have in health, we need to have them in agriculture.
Yeah, I'm glad you brought up climate, because you know, back where I'm from in Australia, we're seeing bushfires at an unprecedented level very early in the season, destroying farms and livestock. How does climate change, and I suppose in many parts of the world, the kind of paralysis of policy on climate change play into how optimistic or pessimistic you are about the outlook?
You know, I think climate change is a reality we need to live with. It just means that we actually need to use data to better be able to prepare ourselves for what the outcomes are. Because if you think of climate change, you know, oftentimes you think of climate in a single direction, but really it's also just climate volatility, right? So it's increased floods, it's droughts, and it happens kind of in the northern hemisphere and the southern hemisphere, and the modeling of that risk on a real-time basis becomes imperative, because you can then start to better manage whether it's inventory in advance if you're government, or if you're a business, manage your supply chain risk a lot more efficiently. So to me, data becomes like critical infrastructure to managing climate risk, and if we don't do that, then I think we're in a very dangerous place.
In the meantime, while we are seeing those natural disasters, tell us about the cost and availability of financing and insurance in the agriculture market.
Well, see, the problem with financing and insurance in the agricultural market as a whole is that the financial
after the Great Depression. And it hasn't changed since. So in places like the US, it's just entirely backed by government. In Europe, it's entirely backed by government. And in most other parts of the world, lending to the agricultural sector is significantly lower than where it needs to be. And financing agricultural risk is really difficult. And data actually becomes an enabler to starting to change the financial architecture. I actually think one of the big things we need to rethink, given the current environment, is what does the financial architecture for our food system need to look like for the next 100 years.
Talking about being backed by government, the Trump administration now giving billions of dollars of aid to U.S. farmers. Of course, we continue to see the U.S.-China trade war. How badly affected has agriculture in the U.S. been? And also, much are they benefiting because of the lack of hogs here in China?
So, the relationship between the U.S. and China in agriculture is significantly driven by soybeans and soybean demand, which is used to feed the hog herd. Now, this year you have two things going on. You have a trade war, and you also have less demand from China simply because there's less demand for feeding hogs. And when you look at the year-on-year numbers of actual shipments, it's running, quite low in terms of on a relative to the 5-year average. You're still 5 million tons plus this season behind the 5-year normal. So it's significantly impacted U.S. farmers in terms of income. However, as you've rightfully pointed out, there's also been payments that have been facilitated both due to climate impacts, because don't forget there were also floods this year in the U.S., and there are also payments that were facilitated for the trade war. And so farmers net are actually, depending on what state you're in, now these payments are not equalized and there's a whole set of dynamics around how to calculate them, but farmers in the U.S. net this year are actually getting potentially being kept whole, regardless of what markets are doing.
How agile is the agricultural and food production industry to be able to respond to shortfalls or to overcapacity, which obviously isn't an issue, but what does your data tell you about in terms of how quickly they can be flexible to respond to changing flows of trade and relationships?
I think it really depends on what crop you're looking at.
Right.
Because there are some where you have very high concentration risk, in which case it gets harder to replace. So I'll give you two examples of concentration risk. Hogs. China is just over 50% of the world's market, and so when you lose 50% of 50%, replacing that is not an overnight act. So there's a lot of questions as to whether pork demand is going to rebound to the levels it was, or whether the Chinese consumer is actually going to start eating more poultry. Are alternative proteins going to start taking hold in the market? So there's a lot of questions to be asked there, but the market's not going to react very quickly to that. As I said, something like hog production is going to take 3 to 5 years to play out. Concentration risk, avocados, right? So if you look at the U.S., 75% of avocados imported come from a single place, Mexico, a very specific location within Mexico. Replacing that supply chain takes time. So it just depends on the crop in the region. There are others where there's a lot more distributed risk.
As an Australian, we take our avo on toast very,
very, very serious.
Yeah.
Oh, is that a thing in Australia too now?
So always great seeing you, and great to see you in person. Thank you so much, Sarah Bankard, Grow Intelligence founder and CEO of the New Economy Forum, of course, here in Beijing, organized by Bloomberg Media Group, a division of Bloomberg LP, a parent company of Bloomberg News.
Still more ahead on Daybreak Asia. This is Bloomberg.
Vai abrir aí, pessoal, o mercado aí asiático. E aí, vamos ver aí. 3 minutos. 3 minutos para o autógrafo.
Right, let's now get a preview of what's walking market later this morning. Sophie.
Well, Sherry, we're keeping an eye on cosmetics player Sasa on a local report that it plans to close 30 stores in Hong Kong over the coming year. This as it reported a loss for the first half. Also keeping an eye on Meituan Dianping, which delivered a third quarter revenue that beat estimates as it expanded beyond its core food and travel business. And watching Chinese furniture maker Kasen International, which is to resume trade in Hong Kong from 9 a.m. local time. The stock was suspended Thursday after plunging as much as 91% on short seller Blue Orchid report flagging concerns over the company's Cambodian investments. And Artgo, which is another stock that suffered heavy losses Thursday, falling 98% before trading, was suspended after the MSCI indicated it will not include the stock in its indexes after saying it would just a few weeks ago. Heidi and Sherry, the high-flying stock then wiping out its 2019 advance. Heidi.
Well, coming up, more big names coming out of Beijing at the New Economy Forum, including the CEO of China Renaissance, Ximing Ventures Managing Partner, and the CEO of Traveloka. You don't want to miss out on those conversations.
That's it from Daybreak Asia. Our markets coverage continues. This is Bloomberg.
Abriu aí. Asiático, vamos ver.
Actually poor. No foreplay?
Eat your bag of lays with a smile on your face.
All the diseases have been taken. I'll take a tax.
Mercado zóio de vidro.
Singapore and here in Beijing. Welcome to Bloomberg Markets China Open. I'm Tom McKenzie, live at the New Economy Forum.
And I'm David Inglis, and I'm here in Hong Kong. We are counting down to the open of trade here in the city, not on the Chinese mainland. Let's get to your top stories this Friday. Investors, well, weighing conflicting trade signals. China remains optimistic, but there's concern over U.S. support for protests in Hong Kong. Now, speaking of, the city votes this weekend in district elections that will be a key referendum of all these months of unrest. Will assess the importance of this weekend's poll. And a question of independence. President Trump's Fed board picks doubts that there's legal reason to avoid political intervention.
Lá vai o win. Lá vai o down. Ih, olha o outro. Despencando.
So David, as I'm sure you can well imagine, the trade negotiations,
Vai o vilonada.
that is obviously part of the conversation here amongst the executives, the academics, the lawmakers that are meeting in the new economy forum. But they're also looking ahead at some of the trends that are going to be reshaping the future economy, including supply chain changes, including artificial intelligence, 5G. The implications of all of those trends are going to be worked through, hopefully with some options in terms of responses as well from the delegates meeting here in Beijing. We have a great lineup of guests, including coming up APCO's Worldwide Greater China Chairman.
Lá vai o outro. Era o down, agora é o outro. Vilonada terrível aí, né?
Yeah, among, of course, the other big names joining us pretty much throughout the rest of Friday here across Bloomberg TV, so stay tuned for all those interviews as well coming up here. Now, in terms of where we are right now market-wise here, there's not really a lot happening. I mean, you had, again, a fairly subdued session overnight. We're up, what?
Daqui meia hora a China abre. 10:30.
4 points here. Nothing really that sort of reverses the sort of loss that we had yesterday. U.S. 10-year back to 1.78%. Flip the boards. You have the likes of South Korea, for example. These three markets opening up as well. So South Korea, Australia to a lesser extent are actually poised for fairly steep declines this week, even considering what you're seeing today here as well. Singapore, another one, of course, just a note here as well, 0.4%. Also quite a steep drop in this market this week, 1% higher in the open in Taiwan. And just very quickly here, flip the boards. Later on today, keep in mind, we have Germany updating us on the final GDP numbers for the third quarter. Euro's trading back closer to 110.50 here. Nothing much to tell you about when it comes to the Japanese currency. Inflation, by the way, but again, nothing really to tell you about. They're 0.4%. 2% is their target. They've pretty much been at about 0.4% for the better part of the last, give or take, I would say 12 months or so. Dollar chart is essentially flat as investors really weighing the risks here going into the weekend. Do we get a deal? Do we not get a deal? Does Hong Kong complicate matters as well? And quickly, as you can see, 0.4% to the upside on your A50 futures. All right, that's your market setup right now. Let's get it over now to New York. Suki is there for us, and she has an update on your first.
All right, thank you, David. We're going to start with President Trump. He has signed a 4-week spending bill that puts off a possible government shutdown, at least until December 20th. The Senate cleared the measure earlier in a 74-20 vote. This is after it had passed the House. This stopgap measure became necessary because Congress again failed to complete action on the 12 annual spending bills that were needed to keep agencies operating by the October 1st start.
É isso aí, galera. O ouro tá indeciso aí, né? Ele deve subir, tá, pessoal? E o Dow aí deve dar uma escorregada, tá? O Dow deve vir aqui para baixo aqui. Vai buscar aqui o 27.685. Deve bater aqui pela terceira vez aqui e querer voltar para cá. Ele deve... Normalmente o Dow sobe, pessoal, quando abre o mercado aí. A China vai abrir daqui 25 minutos. E aí o que a China abrir aí pode ser que ele estoure aí ou vem para baixo. Mas essa vinda dele aqui para baixo ele não vai passar daqui não, tá? Então quem tá vendido aqui sai aqui. E o ouro normalmente dá uma estocada aí para cima. O ouro deve voltar para cá, tá, pessoal? Aqui, essa região aí. Aí por 72, 14,72, tá? O stop tá aqui nessa mínima desse candle. Perdeu aqui, ele vem aqui para baixo. Vai buscar aqui o 14,55. Ok? Então são essas operações aí para a madrugada dentro. É isso aí, pessoal. Obrigado aí pela oportunidade. Eu vou me despedindo aí de vocês aí. Tudo de bom. Muito obrigado por tudo. Valeu mesmo. Ok? É isso aí, pessoal. Boa noite a todos. Muito obrigado por tudo. Valeu. É isso aí, Leandro. Um abraço, tudo de bom pra vocês, cara.